Now, as Europe does hurtle into an energy crisis that's causing fragmentation and infighting already, what's next and what are the implications for U.S. investors? Let's welcome in CNBC contributor Fred Kempe. He is president and CEO of the Atlantic Council. Fred, do you want to just pick up where Brian left off, where we are seeing now resentment breaking out across the continent?
First of all, amen to everything Brian said from Germany. It's great. He's on the front line. People think Ukraine is the front line, but there's a second front to Putin's war, and that's the natural gas front. And one shouldn't celebrate too much Nord Stream coming back online. All that does is it gives Putin a chance to play even more with European publics. He can turn it down, he can turn it up, he can turn it off, but he's not going to turn it off entirely because, as the Wall Street Journal wrote on its front page today, if he uses that bullet, he's got none left. So he's not going to do that. The argument that it was a turbine in repair, most people think that turbine is a red herring, and he will use maintenance and sanctions issues again if he wants to put pressure on Europe. He is counting on democratic fatigue. He's got a war of attrition going in Ukraine, and right now his war has been going better. It's been a grind. It's been difficult, but he's gaining territory, and one has to see these two things as totally aligned. What the European Union is doing, the suggested and voluntary 15% cut over the next 8 months of natural gas, that is Ursula von der Leyen, the president of the European Commission. That's her effort to keep Europe unified. Rather than taking one country off against the other, as Brian suggested could happen, she's setting a goal that's not so high, 15% reduction, and she's saying we should do this across all countries so that we remain unified. It's less an economic argument, it's more of a political argument.
What should investors do, Fred? There were memorable historic bets 10 years ago. Those who thought that spreads in Europe would collapse back towards parity, and those who bet that they would blow out and further widen. And so if people wanted, they could make a similar bet now. Perhaps more prosaically, we have a lot of U.S. companies with big Europe exposure. And should investors be thinking about paring that back or, again, leaning into this if we think this is all going to blow over?
Well, if you're looking at the economics of investing right now, you've got to bet on a European recession and inflation is at a high and energy prices are high. But you also have to take a look at $210 billion that the EU is going to spend between now and 2027 to diversify energy sources and to get out of the business of being dependent on Russia altogether. So if you're a longer term investor, I think you look at where is that money going to go? Where are the people going to build up? Let's also take a look at semiconductors. There's going to be some real building up of that capacity and chips capacity in Germany and elsewhere. And so I think one has to watch also, Europe is not just leery of Russia, it's also a little bit increasingly leery of being too dependent on China. Now, they're not going to give up the Chinese market, but you have to look at more efforts to have homegrown technology, and then also the building of the grid, strengthening of the grid. And this is going to sound a little bit counterintuitive, Kelly, but look for nuclear companies too, because the French are 70% in favor of nuclear, the Germans are 70% against. But you heard the German economic minister today saying, well, maybe we're going to have to find a way to keep our nuclear power going. That would be a big political shift. So perhaps also in not just renewables, but also in nuclear energy.
I just think there's a big question mark as well about inflation, where the Eurozone has 8.6% inflation, and they just did their first rate hike, and it's only by 0.5 point to basically 0.5%. That's not fighting inflation.
No, and then you're going to find some real difficulty in how does the ECB manage the problem it had with Greece? And could you have a situation where you have a debt crisis in Italy, and then again, other parts have to decide how much they're going to get behind that, and does the ECB have the means to manage that? So I think the political tensions that Brian is alluding to are going to grow not just in the energy front, but perhaps also in the debt and the interest rate front, where Germany is always not entirely aligned with Southern Europe when it comes to the inflation. At the moment, Europe has been more united than disunited. We haven't seen Europe this united for a very long time after the February 24th invasion. But there are going to be new strains and greater strains. And as I said, Putin is counting on Europe reverting to its old ways, which is being disunited and being fatigued and standing up to Putin.
All right, Fred, we'll leave it there in a very difficult situation, the continent. Fred, thank you very much. Fred Kempe.
Thank you.